Dear crypto community and blockchain buddies across the globe, welcome back to Cryptonites, the no BS blockchain built with the community and for the community. And today we have another amazing guest here at the Crypto Compare Digital Assets Summit, Christophe from Hedgeguard. It's a pleasure to have you, Christophe.
You too, thanks for having me.
So Christophe, why are you here today? What are you talking about? There's so many exciting things going on here at the event.
Yeah, it's true. I mean, there's a real buzz at the event. It's great to see that. I think obviously with the rebound in crypto prices, everybody's in a good mood, so that helps as well. We're very much on the institutional side of crypto, so we work very closely with crypto hedge funds, asset managers, family offices, anybody who wants to, on the institutional side, get involved into the digital asset space. So it's great to see all the players here. It's a great event.
That's really, really cool. And speaking of which, you guys come from a traditional background, and it's a bit scary, right, for traditional players to jump into crypto. People frown upon those type of actors, maybe because of the lack of understanding. But how was your experience kind of like talking to clients and moving from a more traditional financial background to the crypto space, which some people think it's like a wild, wild west? Yeah.
Sure, yeah. I mean, I agree with you. There's a bit of a misconception regarding crypto coming from traditional players, although I find that those mentalities are changing very rapidly and in a good way. I think you need to separate the price action in cryptocurrencies, which can be quite volatile, from the projects that are being built in the background, all the blockchain related projects that are very innovative. And the two combined together, it's creating a really great ecosystem, very interesting institutional outlook for the space.
That sounds really, really good. And speaking of which, I won't name the bank, but one of my friends working for one of the big American Wall Street banks wasn't allowed to purchase crypto back in 2017. It was forbidden.
Okay.
So he asked his wife's sister to do KYC, and he would give her US dollars to buy crypto for him.
Okay. Can you buy crypto now, or?
I
Or you still can?
I think it's not forbidden, but it's kind of, again, frowned upon.
Okay.
But
Well, that's progress already.
yes,
We're progressing.
it is progress. But based on, obviously, that was his experience. But what is the sentiment these days in terms of the institutional guys looking at the crypto space?
I think it's very positive. So, for example, if you look at the States, obviously, which is a big market and a lot of big institutional players there, you're seeing endowments, for example, that have now invested into crypto. So not only with a VC type approach, but they've actually invested into crypto hedge funds that are trading the market. I mean, that's a big leap forward in a very short period of time. And as you know, in crypto, 2 days in crypto is equivalent to 2 years in the traditional world. So everything moves really fast. So the sentiment, at least from our perspective, is very positive. I think, if anything, the crypto winter was quite healthy. The conversations that we're having now are much more institutional, much more structured. And I think those foundations are very healthy for the ecosystem as a whole.
That's cool. Like in general, like obviously it's very difficult to put a perfect number on it, but how much do you think institutional players put into crypto in terms of their entire portfolio?
Yeah, I mean, if we're being very transparent about it, I think it's still a very small portion of their portfolio. The way you can see it is that they're kind of dabbling into crypto at this stage. But one of the big hurdles, for example, was custody. How can you tackle that problem of security and having safe custody of your crypto assets? Well, now you have all these really interesting solutions that are being rolled out, institutional grade. Fidelity, for example, has rolled out a solution, and that's getting the bigger institutional players much more comfortable.
Fidelity are definitely one of those forward-thinking companies. They've always been ahead of the curve. I remember them building the FIX protocol back in the day to allow normalization, standardization for banks to share liquidity. So very cool company. In terms of what problems you're trying to solve, are you giving accessibility through your crypto hedge funds to institutional players? Is that you want them to get into the space?
Exactly. So, Hedgeguard is a FinTech company, and we have a portfolio management and an execution management solution for institutional players, so for the buy side. So that includes crypto hedge funds, family offices, traditional players, traditional hedge funds, traditional asset managers who want to get into crypto. So they can use our system to trade and manage their portfolios. So we're kind of at the center of that institutional ecosystem. We connect all the different parties, amalgamate all the data, and allows people to run their trading business through our software.
That's really cool. And I guess the data sets, like you're saying, is that where you can provide the most value? A lot of people say that data is the new currency of the world. Is that where most of the value comes from? Is it the data on top of the obviously the platform?
Yeah, so, well, it's in addition to the
In
connectivity
addition.
and all the different analytical tools, but you're right, the data is quite powerful. I mean, if you're looking at a crypto hedge fund manager, one, raising money for a hedge fund is difficult. It's a hard thing to do. It's even harder for crypto hedge fund managers because they have to educate their investors. So obviously data is a very powerful tool. They're also faced with a new generation of investors who use big data tools themselves to analyze the underlying funds. So being able to harness your data through technology is quite an important thing.
It's definitely an important thing. So I'm trying to picture like the typical conversation you would have with an institutional player. Have you ever had someone coming in? It's just like, yeah, but isn't this used just for money laundering, for buying drugs, the whole Silk Road? Those things kind of created a bad stigma for the crypto space. Have you had any people or traditional people have those objections or concerns? And how would you address those concerns for those who still think that it's a bit of the dark side of
Yeah, it's a good
finance?
question. It comes back to what we were saying earlier about people who are kind of standing on the sidelines of crypto and looking at it from outside. If you're in crypto, yes, I mean, it's fair to say there's probably some money laundering going on in crypto, but it's the same thing in fiat, So you have to sort of weigh things with a balanced fashion. In crypto, I mean, what we're looking at is sort of a very institutional grade projects. So that involves KYC, that involves anti-money laundering guidelines, etc. So it's a bit of a different sphere.
So you're trying to build, like you said, KYC, AML, custody, all the solutions that they would get in the traditional world so that they feel comfortable, a little more comfortable.
Exactly. So we actually work with custodians in the crypto space. We'll be working with AML and KYC type solutions that help fund managers. And we're at the center of all that, amalgamating everything for the fund manager and the portfolio managers who are looking to access crypto.
Cool. In terms of the percentage of their portfolio, a lot of people tend to say to institutional players, put 1 or 2%, because if you lose 2%, it's not a big deal, but the actual potential bull run could,
Be 300%.
add 300% to your portfolio, which could maybe increase your portfolio by 40, 50% by only taking 22% risk.
Sure.
Are you kind of along those lines? Would you suggest a little less or a little more? Is it?
So we work a lot with pure crypto hedge funds. So they have, they have 100% of their portfolio in crypto. But on the traditional side, so if you're looking at traditional asset managers, some hedge funds that are dealing in equities, bonds, and traditional asset classes, back in 2017, they had a small portion of their portfolio in crypto, kind of dabbling, testing it out. And as the market rallied, that portion became something more substantial, and they got much more interested all of a sudden. So I would agree with you. Crypto does offer those sort of asymmetrical return profiles. And if you're a fund manager, really, you want to be in an asset class that has a lot of volatility and that produces a lot of opportunities to capture alpha.
You know what? I want to ask you that's such an interesting answer. Asymmetrical risk return ratios is something that Carl Icahn talks about a lot as well. Do you mind just explaining that in simple terms, how you would actually define asymmetrical risk return ratios?
Well, really, when you're trading, it's all about risk and return if we're just boiling it down to the simple approach. So if you're risking, as you said earlier, if you're risking 2% to potentially increase that exposure to 10%, let's say, that's a very nice risk return profile. A little bit of risk, but a lot of potential return. And crypto, with its volatility, offers a lot of opportunities for fund managers to capture those price moves.
Yeah, absolutely. That's a really good point. I think Tony Robbins as well, he talks about how, like some people see everything as high risk, high reward. But if you understand something, it's not necessarily always high risk. It could be medium or low risk and high reward, just depending on your level of understanding.
Is Tony Robbins trading crypto as well? Or?
I wonder. Yeah, wouldn't that be that would be a good promotion for crypto, right?
Great,
So,
yeah.
Let's call him next time.
Yeah. We'll invite him over.
And in terms of, so you offer also a PMS to
Yes.
these institutional clients. Can you tell us a little bit more about what a PMS is and why?
So it's what you call a front-to-back system. So in a nutshell, it's a software that allows fund managers to focus on finding new trading ideas and raising assets for the fund, and everything is taken care of by the PMS. What does that mean? It allows you to track your performance, organize and manage and track your portfolio and your positions, takes care of compliance, risk management, reporting, and a lot of different operational back-end type functionalities as well. So it's a very complete system, and it really helps as I was saying, the fund manager, it takes a lot of weight off his shoulders, and allows him to focus on high-value tasks.
And speaking of taking off weight off people's shoulders, obviously machine learning is being used more and more in this space. What do you see in terms of having man and machine? Like, do you eventually see like machine learning and algos taking over the job of the trader, or will we always still need to have a physical person there too?
I think it depends on skill sets, really. I mean, if you look at the hedge fund space, you have an increased number of systematic strategies that have been rolled out over the past years, but you still have very, very talented discretionary portfolio managers who are not using machine learning, who are not using systems a systematic approach to trade, but just relying on their sort of gut instincts and experience to pick out good ideas. So to answer your question, I think it's going to be a combination of both. Definitely what we're seeing from our end in the crypto space is a lot of systematic, automated, market neutral type strategies that are being rolled out and looking to capture opportunities in crypto across different exchanges.
Yeah, absolutely. That makes a lot of sense. Like, relying completely on technology is still something that's a little bit difficult. So having a combination of both would make sense. Like a lot of the people in our company that work on machine learning, they say that machine learning is just a tool to help you, the human being, make better decisions, but doesn't make decisions for you.
Yeah.
Is that kind of like how you see it? Or?
Yeah, I think that's fair. I think obviously if you're looking at it from a pure trading perspective, machine learning technologies are adding a lot of value if you're running a systematic strategy, and especially in crypto where there's a lot of arbitrage opportunities that rely on a systematic approach if you want to capture them quickly.
Yeah, arbitrage opportunities, especially in 2017, was bonkers, right? A lot of the crypto hedge funds were making a lot of money. So these days with YouTube, a lot of people are doing technical analysis and wanting to learn a lot more, but it's a full-time job. Like trading is no easy feat, and even professionals sometimes get burnt. What is your advice versus when it comes to comparing trading and investing?
Yeah, I think you raise a really interesting point. If you look at social media, be it YouTube or Instagram, you can quickly dive down the rabbit hole, and you have all these crypto/forex/technical analysis experts. So for somebody who's starting out, you have to be a little bit careful as you navigate that world. Now, if you want to become a full-time trader, that's one thing. You have intraday traders, you have swing traders who are looking at more medium-term type positions. So maybe that's an easier thing to manage if you have a full-time job on the side. If you're looking to invest, that's a whole different sort of time frame or time horizon in terms of your investment outlook. And it's interesting you raise that point, because on the institutional side, a lot of the hedge funds or crypto hedge funds that started off a couple of years ago, they were actually applying VC type investing, which were in essence longer term investment horizons, but within a hedge fund structure. And so it was a total mismatch between fees and liquidity. So they've had to now reposition and rebrand themselves as a more sort of VC type vehicles rather than hedge funds.
That's an amazing answer. That's really, really cool take on that. So if we want to follow you, we want to know more about the PMS, the platform you're offering, the data sets, where should we just visit the website, or are there any sources where we can follow
the website is a good place to start. So it's hedgeguard.com. We've put up a lot of material on there, a lot of educational material, brochures and everything if you want to, that you can download very easily. So that's a good starting point. And we're also on Twitter and on LinkedIn. If you want to fill your Friday evenings by following the crypto institutional world, it's a good place to start.
It was an absolute pleasure hearing and learning from you and understanding the institutional side, because it's really hard for us to guess what's going on. It's usually behind closed doors. So having your insight on that was really, really fun. Thank you so much for coming in today.
It's great to be here.
Yeah, definitely have you in the future. And thanks again for tuning in to Cryptonites. If you have any questions, please feel free to put them in the comments. We'll try to get back to you with an answer. And don't forget to like and subscribe and blast that bell notification. Thank you so much, and catch you next week.